Let's see, what we're doing here first. Expand Energy, I think, is what we're doing first on the companies
Sure.
here. They're Expand Energy, their symbol is EXE. They're in the oil and gas E&P industry. 4% short on the float side, 95% institutional owned. PE ratio, unfortunately, not a good start. 35.1 versus 14.7. Price to sales, 2.4 versus 2.1. Price to book value, 1.4 versus 1.5. And price to cash flow, 6.5 versus 4.8. Not a great thing. No PEG ratio here either, unfortunately. Not great on the valuation sides for Expand Energy. Now, over the last year, the earnings, there's no growth on the earnings, probably because they're negative. This is kind of strange. This could be because I forget when they took over Chesapeake, but it shows sales are up 157%. So that could be because of that merger there, or that acquisition, I guess. They do pay a 2.9% dividend, use 100% of the earnings to pay that out. That is not good. Look at the balance sheet, a little bit weak. The current ratio is 0.8 versus 1.4, so they are suffering from some liquidity. And then we do see the debt to equity does look good, though, 0.3 versus 0.5. We have a net profit margin of only 8%. I say only because the industry is at 14.5. We do see that free cash flow is $1.4 billion, not too bad. About half the industry at $2.7 billion. Chase, what do you got?
Yeah, so just a couple things to kind of bring up. You brought up the Chesapeake situation. So Chesapeake and Southwestern Energy completed their merger on October 1st, 2024. So that would be looking at that time period. Also, too, I point this out as an interesting thing, but Chesapeake did actually file bankruptcy in 2020 as they were struggling, and then they reemerged in early 2021, kind of cleaned up that balance sheet because you gave a pretty good balance sheet in terms of the debt to equity. Again, 2020, they were really struggling with debt levels.
And I do remember I had a client that came over to us, and she had Chesapeake Energy, and she would not sell it. I go, the balance sheet does not look very good. They got a lot of debt. It's not looking good. No. And I think it went up to 100. Chesapeake did, I think, at one point, or very close to it. Obviously, went bankrupt. She lost everything.
Yeah, it's high debt companies are very dangerous. Now, we looked at Chesapeake, or I said Chesapeake, Expand. They changed the name after the merger with Southwestern. But the current price here is $109.49. And we wanted to look at this because natural gas prices this week were just crazy. They're up 72% over the last 5 days.
Because the storm's back east.
The storm's back east, and I was reading this. A big winter storm is expected to dump heavy snow, sleet, and freezing rain across the southern Rockies, Plains, and the southern U.S. by Friday, and then is forecast to shift toward the East Coast through the weekend. And I'm like, wow, gosh, sometimes I hate living here in San Diego because of all the nonsense I'm going to say. But then you look at this and you're like, I guess that's why we live here. It was like 70 this week.
Yeah, I know. Oh, but it's cloudy out now. I think it's only 68. So,
But anyway, so that should obviously flow through considering this is the largest natural gas producer here in the United States. But 52-week range for Expand Energy. Again, their ticker symbol EXE. It's $91.02 is the low. The high, $126.62. Going forward for the business, we go out to December 2026. I see estimated earnings per share of $8.73. Gives you a target sell price of $144.92. Means it trades around 12 and a half times those future earnings. Also, too, we will be getting new numbers here shortly for the business. If we look out to December 2027, it is estimated to climb further to $10.06. That would give us a target sell of almost $167 a share. So actually right around 11 times future earnings. But the big problem is the spread between the analysts. The low for 2026 is $5.43 and the high $13.07. These energy companies are hard to predict because you're not just predicting the business, you're trying to predict a volatile commodity like natural gas.
And again, we did see, as you said, up 70% on natural gas because the storm's coming in. I didn't think it would ever move that much. That's just kind of crazy.
I did see there was short positions at 14 months highs.
Oh.
So that really, I think, made that spike even more drastic than normal.
Right. And I think it's a good area to look at. I'm glad we looked at this company because we are concerned about energy usage, short of it because of all the data centers. But I just don't think this is the right company, the right time to buy it. I'm very cautious, and I just don't want to take that risk.
You have to understand these natural gas companies. I mean, with a volatile commodity like natural gas, I mean, things could be going great, and all of a sudden, prices depress, they get in over their heads, and then you end up with a Chesapeake from 2020,
Yeah.
and then you have big problems.